All right, Saturday afternoon. Just doing. Got, got back from a ride and just doing some homework, clean up on some of the portfolios, just making sure everything's where it's supposed to be. Waiting on the scans to come out for tomorrow. Um, Obviously, we were talking about how do you get to $1 million. Well, let's start off by talking about um, some of the swindlers that are out there that are, promising you that you can make $1 million off of trading, penny stocks and futures and this and that. Look, this all comes down to, you've got to have money to make money, but when it comes to investing, it doesn't matter the size of your account. Okay, it just takes you longer to get to your goals. So when we're talking about a million, I'm going to go down through a few of these little shysters that are out there, but um, and we'll show you how you can start investing correctly to get to your goals and without causing yourself a lot of heartache going down the same road as a bunch of other people do, because everybody wants to be a millionaire. All right, and not everybody's going to be. I hate to tell you, but this is only going to get through to a small percentage of people, and they'll take it to heart and they'll understand it, and do with it what you want. But I hate seeing people getting taken by all these shysters that are out there. These guys have gotten to their net worth by, in most cases, taking advantage of others. But let's start off with this guy here, a guy named Stan, the Trading Man. I had never heard of this guy before, but apparently he's done really well during this pandemic. It looks like thousands of bored, jobless Americans are now chasing these stock market riches by gambling. They're again gambling on penny stocks, right? You don't have a lot of money. Maybe you got that $1,400 from Uncle Sam, and you're like, well, what better thing to do? Let me throw it on the penny stocks, and poof, there it goes. It's gone. Well, wasn't any money you worked for, so you don't feel too bad about it. So, anyways, what these guys do, and they're all over the internet. Okay, they'll get out there and they classify as pumpers. So what they're doing is they're getting in. I talked about this earlier in a little bit about a guy named Ross Cameron. I'll get to him over at Warrior Trading. What these guys are doing is they're accumulating positions in a company, in a penny stock, and then they heavily promote this to others. And in this case, this guy was doing it on Reddit. I don't know if this guy's being investigated. I'm pretty sure he has been, but he doesn't have. He's got a big following as far as people that are newbies. You can never tell if these guys are legit or not unless you actually sit there and watch them for a while. I've never seen this guy, so I don't know. I just came across this, but well, it looks like he had some problems with inappropriate messages with female traders. I mean, the typical, you know, this is what this is how these people operate. But I'm sure quite a few of you guys have probably come across this in the headlines. Huang, Bill Huang. What was the name of this company? I didn't follow. It was Archegos Capital Management, AGM. He had been doing the same thing. The sailors of the world pumping up their company, not releasing the correct information, where they have manipulative trading, deceptive conduct that caused others to trade. Just go down through the list. You can read this. You can find it online. This is actually the government, coming after them. This is SEC. Increase from 5 billion to 35 billion. I mean, come on. I mean, if you believe it, you believe it, But if it's too good to be true, all of a sudden it raises those red flags. So I don't know the entire deal. All I need to know is, look, he's racketeering conspiracy. So what that means is he's the head guy. and there's other people involved that are trying to take advantage of people by pump and dump. All right. So then we go to, what's this guy here? Stock trader arrested with, and this is on October 26th of 2021. And this is just a handful. Okay, there's hundreds of people getting popped on this all the time. So you don't know who to trust out there. And if you're, just dying to make $1 million, you're going to fall for one of these schemes. So this guy was arrested and charged with securities fraud for using his Twitter account to operate a pump and dump scheme. There we go, another one. This guy's name was Stephen Gallagher, allegedly operated a social media pump and dump scheme on Twitter to defraud retail investors, earning over $1 million in illegal proceeds. So you can go down through, I'm not going to go down through all this. If you want to read about it, that's fine. But what we know is he was dirty. That's all we need to know, right? So, and coming back to this one here, I've got some notes on this one here. What we can do with those. So let's go. This is the counts from the district courts of the District of Massachusetts. So you can see Warrior Trading, Warrior Operating, Ross Cameron. He's this CEO or CFO, whatever he wants to call himself. So the FTC came in. What were they saying here? Fraud and Abusive Prevention Act. And I don't know exactly what he was charged with. Defendants. Anyways, this was the one case that he ended up paying $3 million. So look, if he's got $3 million, it's estimated that he had about $11 million that they took from folks. So it's quite a bit. And this guy's still online. He's still doing the same thing. This guy does the same thing. He front runs everybody. So he buys into these cheap stocks, and then, he's probably got other people working with him. They pump it up, and then a unassuming, doesn't know anything, newbie comes in there and says, oh yeah, I'm going to make $1 million. This guy says I can make $1 million. He unloads $1,000 into the stock, and poof, it's gone. All right. So you can tell, let's see, what does he say here? Warrior Trading has proven a profitable day trade strategies. 2, the strategies are scalable. 3, the strategies are effective in initial investments as small as $500. So what's he preying on? He's preying on people that don't have much money, right? And there's a lot more people with small amounts of money out there than there are with large amounts of money. It's just it's a numbers game. And so what they do is they try to sell you, these strategies that are supposed to be profitable, and of course in this case, they're false, misleading, and unsubstantiated. All right, so where was I at on this? 21. Yeah, so, okay, so here's the FINRA regulations require members to promote day trading strategies to provide non-institutional customers with a clear and conspicuous warning that states as following in the relevant part. Day trading can be extremely risky. You should be prepared to lose all of your funds that you use for day trading. In particular, you should not fund day trading activities with retirement savings, student loans, second mortgages, emergency funds, funds to set aside for purposes such as education or home ownership, or funds required to meet your living expenses. To the common person that has common sense, you don't need to have this, flashed in your face, but there are people walking amongst us that hadn't got a clue, all right? They fall for this hook, line, and sinker every day of the week. Don't fall for this crap. Further, certain evidence indicates that an investment of less than $50,000 would significantly impair the ability of a day trader to make a profit. Of course, an investment of $50,000 or more will in no way guarantee success. Duh, right? If you don't know what you're doing, or you're just throwing money into the market and just hoping for the best, you know what's going to happen, right? Emotions come into play. There's so many different factors that come in. So this is what I'm saying. We're going to show you how you can invest with $5,000 and start your investing career from there. And you don't treat it like a casino. You don't listen to any of these idiots. You don't try to get rich quick. You follow rules. That's what it's all about. Rules, money management. Anyways, let's go down through here. So he was peddling this stuff to the United States and internationally, and apparently, I think he was actually telemarketing this. So he was calling people, get your phone number, and next thing you know, it's high pressure sales. Oh man, you got to do this. This is what you got to do. Anybody that's fast talking, I mean, you should know this. I mean, I've been around a while. I'm 55. All right, been around a while. I've seen this over the 30 plus years I've been investing and trading, and it never fails to amaze me that people keep getting pulled into this. But there's nobody out there to warn you. Hopefully this video will get across to somebody. Somebody will stumble across this and they won't make the same mistake. But where was that one? I'm trying to find the one that was pretty funny. So this is what this guy looks like. You can go to his website and just listen to him. If you watch this guy, everybody else that you watch online that's got some, and they're showing you all this, how fast they're making money, and they're throwing up numbers. And if you believe it, you deserve what's coming to you. Okay? I can't substantiate any of his claims. I don't know. Like, look, he's saying that I've made over $300,000 in one day, or last 4 days. I'm sorry. So $41,000 one day, $117,000 one day, $76,000 another, and $86,000 in 4 days. Like, come on. I mean, preying on the people that hadn't got a clue. Don't be one of those people that doesn't have a clue. Look at all this information, all right? It's good to go over this every once in a while. Find these people and say, you know what? I don't want to listen to that. One guy I don't put up on here because I can't substantiate any of this stuff is Jim Cramer. I mean, I follow the guy on Twitter more or less for entertainment because, what is it, the inverse Cramer rule? Is that whatever he says, buy the opposite? But he's an entertainer. You got to know that first. He's an entertainer. The guy's wrong more than he is right. I don't know exactly how he made all his money, but he's not making it trading, I can tell you that. Yeah, and then okay, so defendants, that being Ross Cameron, whose training included instructing their customers how to get around FINRA pattern day trading rules. If you're not familiar with that, what that is, if you don't have $25,000 in your account and you trade 4 times in and out, meaning round trip, so you buy and sell, buy and sell, buy and sell, buy and sell in the same day, and your account is under 25,000, you're going to get slapped with the pattern PDT rule. Okay, they're going to shut your account down until you either come up with more funds to get over the 25,000, or you call them and you say, hey, look, I won't do that again. It was just a mistake, right? That's not what we do. Okay, most of what I do, sure, you can have it trade pretty quick in one day. You can have that 4-day turnaround, or I'm sorry, four trades in one day. But you want to make sure that doesn't happen. So what do? If you're under 25,000, you want something that in most cases has a slower vega, moves slower, right? The pricing doesn't move as fast, all right? So you're not going to hit your target as quickly. And once you get over that 25,000, you don't care anymore. It's, to some people, it's a stupid rule, but it's there to protect the dumbasses that are out there. There are dumbasses out there that just put 25 grand down and they start trading it, and it's like, oh, I won. Hey, I won. It's just like pulling the damn arm in the casino. And they get hit on their number 4 and their account's shut down for 90 days and they're like, oh, this sucks, man. And it's like, okay, they don't understand. They don't understand. All right, so let's actually look at some statistics here. Now, more than 67% of actively managed U.S. equity funds underperform the S&P Composite 1500 index. which comprises 90% of all publicly traded companies over 3 years. Okay, we're at 752 days without a loss, and we're beating the S&P by about, what is it, 14%, 12 to 14%, somewhere in there. All right, just to give you an idea of what we do. Okay, 72.8% of funds fell short over 5 years. Now, when you're talking about funds, you're talking about a collection of stocks. So if you're looking at all the stocks in each portfolio that I have, you can actually classify that as your own fund because it's a well-diversified fund. It's not like I have one stock. That would just be a portfolio with one stock. But I look at it as each one of my portfolios has several hundreds of stocks in each portfolio. It's a fund in itself, okay? So then we look at, but we don't have those fees. That's the nice thing. So you look at 83.2 fell short over 10 years, and then 86% over 20 years. So you look, when you're looking at these people that are managing your money for you, you're looking at the, oh, shit, I can't remember, not Charles Schwab, that's your self-directed, but Raymond James, Edward Jones, any of these that are actively managed by a portfolio manager, and it's not you. So you're hiring somebody to manage your money. They're losing money. Okay, 67%. That's a lot. This is why you want to manage your own money. So let's look at the percentage of mutual funds that beat the S&P. So about 85% of large cap stock funds underperform the S&P. So remember, take into account large cap stock funds. They don't talk about mid cap and small cap, all right, in this particular quote. The second worst percentage on record. Now this is dated March 21st of this year, okay? How the hell are you losing money in a market that was this crazy? I mean, what we got here? Okay, so commonly, let's say, do most investors beat the S&P 500? Commonly, the S&P 500, it's one of the most popular benchmarks for the overall U.S. stock market performance. Everybody tries to beat it, but few succeed. Well, you can put my name up there. Yes, we beat it. Okay, dividend collection team. But they'll never put that in there, right? And so how I put something up on stock analysts, all right? So how often are stock analysts correct? Those are staggering statistics that show the highly paid research analysts who are expected to be pretty accurate had up to an 81% failure rate. Okay, if you look at a stock analyst, i.e. Jim Cramer, he has an 81% failure rate. That's just on average. Okay, if he's better than everybody else, you're going to have to prove it to me. I don't think I have anything else in there. But okay, so let's go over to a little this thing I found, Smart Asset. You can do it by hand if you want, but this is a little bit easier. So well, let's go to PowerPoint first here. Okay, so how to get to $1 million? You need to understand the rule of 72. This is simple mathematics. Okay, you got to have patience, and of course you have to have some money. So what we're going to do is reverse engineer this. Let's start with the rule of 72. Whatever percentage you decide to use, this will give you an approximation of the number of years it will take to double your money. I myself target 1% per month. That's equal to 12% per year. 72 divided by 12 is equal to 6 years to double your money. All right. I stress this because this is the simplest, okay, the least riskiest way to do this. The less percentage gain means less risk, and how you manage your portfolio. So we teach this going forward. So okay, so working from a target backwards, okay, if your goal is $1 million, we're just using round numbers here. Now I want to preface this by, we're not adding any money, okay, outside the initial amount of money that we have, that we start with, okay. So in this case, we're going to look down here and say 43 years from now, we're going to have $1 million. Okay, so we go down the list here and we look, and we started out with $7,812.50 43 years ago. If we do nothing and we use this particular strategy, okay, we say 1% a month, 12% a year. This is what the numbers will yield. Okay, so we start back, we just go backwards. Okay, so 6 years to go. If you doubled your money with the 12% rule, or 12%, or the rule of 72 divided by 12 is 6 years. So we just go in 6-year increments. So every 6 years we double our money. So we come down first 6 years, 500,000. 12 years to go, we're down to 250,000. 18 years to go. Oh, we got tears. It's misspelling in there. Let me change that up real quick. And you can see on down, so 62,032. You're just dividing it by 2, right? Because you're doubling your money. So that's a real simple form, right? If you just had $7,800 and you stick it in the market and you use this particular strategy and you manage your money, you learn how to do this, in 6 years, you will have doubled your money at 12%, okay? You're beating the market, right? The next 6 years, same thing. So let's go over to, get this off of here. We'll use this little calculator, online calculator, smart ass, I don't know who they are. So let's put that number in there. What was it, 7812? Okay, and we're not putting any additional money in. We want a 12%. All right, so what does that come to? 15,000. All right, so let's take that number, right? So it took you 6 years to double your money, and 15,992. We doubled, right? 6 years, doubled money, 32. Sound familiar? We come back over here, 3125. So this one's a little more accurate. Now, we're not adding any money, okay? All we're doing is letting this double. So what does that come to? 32,737, right? So now it's 67. So you can see down here, investment growth over time. This is where you're going to make your biggest gains. You're going to figure this out, okay? Total interest earned in the starting amount, okay? We're not talking about interest dividends, okay? We're talking dividends and trading, okay? This is just a calculator for 12% interest. You can make more, you can make less. The less you make, the longer, the less return that you have on your entire account over a year, the longer it's going to take you. So let's just say you had 15% 1 year, right? Or over a 6-year period. Then look at how fast it comes up. But that's it in a nutshell. There's not a heck of a lot to this, but if you understand how fast that you can grow your money, okay, in 12 years, let's see, is that right? 12 years? Yeah. So in 12 years, you're going to make your money, and then it's going to double again if you just follow the same pattern. Now, let's go back. I know what you're thinking. We'll go back to that 7812, okay, at 12%. So we double our money. Watch what happens. Let's just say we put in an additional $100 a month. That's $1,200 a year. Uh-oh, what just happened there? Look down at the total contributions, right? Over that 6-year period was $7,200. Your starting amount was $7,800. Now your total interest earned is $11,000. What just happened? What just happened? You just took off 6 years. Okay, let's see what happens if we add 200. Oh, 36. Now we're really cooking, right? So we're still up in that same area, but you get the idea. The more that you put in per month that you can afford, don't be going stupid. But remember, this all hinges on you being debt free. Okay, if you're not debt free, don't even start this. Get debt free first. It doesn't matter when you come into this, it's always going to be there. If you only got 24 years to go to retirement, heck, you can do this for the rest of your life. I'm going to do this until I die. It doesn't matter. If I die at 75, I got 20 years. So what's that? I got 3 more of these to go, right? It doesn't matter, right? And what am I going to be doing at 75? Collecting dividends, right? That's all I'm going to be doing. So if you're young and you got 43 years to go and you got $5,000, stick it in the market. Learn this system, understand, right? And then you say, okay, I'm not even going to put I'm going to put $50 in a month. So at $50 a month, not only did you double it, you tripled it in 6 years just by adding $50 a month. So understand that. That is the most powerful thing that you have to invest. Now you start looking at it and it's like, well, why would I throw my $5,000 to this guy that, you know, is telling me that I can do penny stocks, and 81% of the people that, or 80% of the people that get involved in day trading lose money in their first year, and the numbers just get worse as it goes along. So hopefully that helps some folks out there. I'd get more into it. That's just the basic understanding of interest and trading profits. You're not going to get 12% on your money anywhere, not yet at least. I mean, those days back in the 70s where they were getting, you know, 10, 11, up to 20% in some cases, depending on, you know, what type of contracts they were signing, bonds, you know, all kinds of different things. But nowadays, you're not going to get that type of return. So it's important to, you know, get your money, put your money where it's going to be working for you. We look at what's that, keep track of, you know, interest rates just in general, because, you know, when everything comes level to one another, maybe it's a good idea to put some of your cash over into something else. But the whole idea is if you can continue to do this day in, day out, and have the same kind of success, I can back my success up. I'm not going to be getting investigated by the SEC. Why? Because first off, I'm not telling you what to buy. I'm showing you how to manage money. Secondly, if I can show you on paper, and I can show the SEC that I haven't taken a loss in 752 days, do you think they're going to mess with me? No, because I have the information. I can say, hey, here's everything I got. You want to talk to my CPA? You look at all 15 accounts, and you're like, yep, he's legit. You'd never hear about it, right? But let me tell you, if I ever do get audited or whatever, I'd put it out there because I ain't got nothing to hide. So, oh, and in the background here, if you're looking, I was just going down through a couple of these other accounts. This is actually MotiveWave. Somebody asked me about it. It's just a little bit cleaner platform. You can hook it to, well, you'd have to go to their, their website to see who all they work with. But look, if you're just starting out, you don't need all this fancy stuff. And these you can tell I don't use half the horsepower. I don't even use 1/10 of the horsepower of these platforms. I do for, you know, different types of trading, but for this type of investing, you don't even need charts. This is the whole game. There's many people out there trying to sell you, you know, what is it? Study this, study that. You know, let's see. You got ATR channels, you got Keltner channels, you got fractals. You know, you go down through the list. I mean, it's, if you know how to use them, yes, they can help you on your entries, but your entry has nothing to do with your profit. Okay, your targets, when you're going to take profit. You know, if you want to be this long-time investor that, you know, say, hey, I'm just going to get Coke, right? And I'm going to buy Coke. Let's see, I think I have it in here. Yeah. So you see, there's Coke, and this goes all the way back to July of 20, right? So if you're buying Coke right now at 64.38, you're going to make about what 2.5 to 3% on your money. Now it would have been the same, you know, it'd been a higher percentage down here, but the same dividend amount would be coming into your portfolio. So it's going to be, you're going to be hard pressed at 3%. It's going to take you close to 20 years to double your money, right? So you ain't got that much time, but that's where your risk comes in. But look, if you've got $1 million, you know, if you're willing to take 3%, that's $30,000 a year. But I wouldn't do that. I'd spread it out. I wouldn't want all my money in, you know, one product. Just because Warren Buffett does it, you know, he's making $150 million a quarter. We're not Warren Buffett, okay? This is exactly what he was doing when he was younger, and this is how he got to this point. All you got to do is back it up and see. You know, he got lucky in some cases. You know, he had quite a few stocks that actually split. You know, like Coke is a great example. He was in on 2 different splits. Otherwise, if it never split, he'd only have 100 million shares. But he's got 400 million shares. So, I mean, yeah, there's some luck in it, but I mean, he's had it for 20 years. So that's just one of those things. He had a lot of 20 years ago when he bought it. He had a lot of money. So you're just putting it where it's going to make the most so that he can double his money. He could see these things coming. It's no secret. But I think that's about it. Yeah, and Interactive Brokers is now, I don't know who this Paxo is. I looked into them. It's a limited New York limited trust company. I don't do my crypto trading through these guys. That's just another tab on their portfolio or on their platform. So we just kind of, I look at that just for, you know, and you can tell this is a derivative, okay, because it's not live. You don't see anything going on here. If you go over to no, that's not it. You go, I have it on going through Coinbase. Whether Coinbase is going to be around, who knows? But that's neither here nor there. But if it's not trading live, then it's not actually crypto. It's going to be a derivative of crypto or an ETF of some kind. But they're basically custodians, and I want to trade the real thing. I don't want to own a facsimile, okay, that can be manipulated. Now, I don't. It's just this thing I've seen over the years. I don't trust ETFs. I don't trust ETNs. There's just too much that can happen with them. But hopefully that helps some of you guys. You know, remember, scans come out tomorrow. We're trying to get the community a little bit bigger. If you got any questions, just email me. I'm not sitting behind my computer all day, you know, trading. You shouldn't be either. The whole idea is to get your trades in and go do something. If you put a little bit of money, well, we already discussed all that, so you can figure it out. And, you know, like I said, if you got any questions, give me a shout. Anyways, have a good 4th of July, and we'll see you back on Tuesday.